Nio just had a groundbreaking month with deliveries up 133% year over year, inching closer to 5,000 vehicles a month. And that's not all. If you look at the other metrics that they posted here, their quarterly performance was up 154% year over year. Delivered vehicles in Q3 up 113% year over year. And total vehicles delivered so far for the business is around 58,000. And all of this, guys, has helped push the stock price of Nio up higher and higher week after week. But is this sustainable? Now, while growth does appear to be slowing down next year, it's still way higher than many other growth companies out there. With this year, it's expected to be around 100% year-over-year growth, just slightly under that. Next year is about 75% year-over-year growth. And even if you look at their earnings here, their EPS, they're expected to see big leaps of growth here. However, the caveat is, like we can see, the profitability just isn't there yet, and the stock seems to be plateauing in the upcoming quarters. Now, I guess on the flip side, you could be optimistic and say, hey, there's still double-digit EPS growth expected for the foreseeable future, so the company is still doing well in that regard. However, what I am a bit concerned about is that they are having a very hard time to crack that profitability mark, and from what analysts are expecting, seems to be that they can't really get past that negative 10 cents per share estimate here. Now, is this concerning? I mean, Nio is a growing company. Growth is what they're focused on, and they're delivering on that. Profits, not so much. And myself, I realize this. I'm not in Nio for profits. I want to see this company grow as big as possible and then eventually turn on that switch for profitability. Now the question is, does Nio have access to that switch to turn on when they choose? That's where things get a little bit blurry, and I mean, I'm trying to be optimistic here. I'm trying to see the plus side of investing in a business like this with such high growth, such high potential, and a really good amount of customers in China. However, I gotta be realistic at the same time. So all of this, let's discuss that here in this video. Drop a like down below and let me share my thoughts. Right now, Nio is at a stage in the business where it's good news after good news. Growth is doing well. You know, they have new offerings for the company, new services, and quite honestly, everything is just good, good, good. And as we just saw, this pushed the stock price up enormously. The stock is up hundreds of percent in about a year, and this has provided excellent return for any long-term investor in the stock. This is especially true for those who were brave enough to invest in Nio last year when the company was trading at just a few dollars per share, and it was literally at the brink of bankruptcy. So, I mean, you had to have a lot of guts to put a good amount of money into the stock at that point, and if you did, you have been rewarded handsomely. Don't think that, this is always the case. Not every company is able to recover like this, and sometimes a company declines massively. They have huge potential future prospects, but the stock price just never gets there because the company falls flat, they don't deliver, trends change, and consumers realize, hey, that's not as great of a product as I thought it would be, which results, in less revenues, less profits, and as a result, a less desirable investment. Now, I'm not saying that's happening with Nio. Clearly, it's not. The stock's recovered massively. It's pushing new all-time highs on a weekly basis. But all I'm saying is, for other investments in your portfolio, don't think it's going to follow the same trajectory as Nio. So just be realistic, look at the industry, look at the growth prospects, and judge it on a case-by-case basis. Now, this is the thing, right? So if you're looking at Nio stock today, $20-something per share, you're looking back a year ago, you're like, oh my God, I could have picked up the stock for, $3, $4, $5 per share, double, triple, quadruple my money in about a year. It's a no-brainer investment. Why didn't I invest back then? Well, there's a few things about Nio specifically that differentiates it from, Tesla and other companies that has me a bit, not concerned, but I guess it doesn't sit too well with me. The first is that Nio actually doesn't produce their own cars. They work with JAC Motors, which is another Chinese company, and they're the ones who actually go out there and build the cars for Nio. Now, while this partnership helps Nio scale and push thousands of cars a month like we're seeing, the company itself, Nio, doesn't get to keep those profits. They have to pay JAC to make those cars for them. Not only that, but Nio also has to pay another company for the batteries. So you can see here the costs start adding up for this business, and that results in one of the key metrics that I look at being negative. Gross margins for Nio, as you can see here, has not hit positive territory. This means that for every vehicle that Nio is selling, they're spending more money on materials and costs than they're getting back for the value of those cars. Now this is kind of not really a red flag, but definitely something to monitor, because it tells me that because nothing is in-house, the company has to pay all these other businesses to make the cars for them, and what's left at the end of the day isn't really enough to bring in profits. This is why Nio has resorted to other things recently, battery swapping stations, which they operate, and battery as a service subscription model, which they hope to gain a lot of traction with. And those metrics should help drive profitability in the business if it's successful. However, their cars, no, they're not making money on that. This is unlike Tesla, which is one of the best automakers when it comes to profitability, gross margins. Tesla makes a lot of money on their cars, and it just took them time to turn on that switch of profitability, whereas Nio, they're still looking for that switch. But that being said, guys, I'm invested in Nio. I am technically a Nio bull, so I am optimistic on the future of this business, and I've put my money where my mouth is. I have a stake in the company, and I manage that position accordingly. Now, I realize Nio is a high-risk company. I realize Nio is highly volatile. Nio has a realistic possibility of never making a profit, as we can see from the metrics. They have to come up with something new to drive profitability, because what they're doing right now just isn't working. However, I am a believer that they will figure it out, and I have a feeling that, if they do have more tough times ahead, other businesses, some large giants in China, maybe the government, who knows, will step in to help the company out. Now, that may or may not happen, but I think it has a better chance of happening than not. Now, looking at the weekly chart here for Nio, we can see the company has really been on a huge run. As a shareholder, like I said, see where the arrow is. That's kind of my cost basis when I bought in last year, and it's been a great run for me. But, I asked myself the question, is this sustainable? I don't know, guys. I'm still kind of on the fence. When Nio was trading at, a few $billion market cap, definitely bullish on the company, because that felt very undervalued. But now that we're pushing 26 billion, for what they're doing today, it's kind of rich. I expected them to hit this valuation in a few years, if anything. However, they've reached that much quicker, but the fundamentals of the business, like the actual metrics that matter, gross profits and all that kind of stuff, is still lacking. But like I said, I remain optimistic on this business and the future of this business. But let's kind of bring it all back in here. Nio is doing well right now with their deliveries. Nio is selling a lot of cars, and from an outside perspective, the company is doing well, which is what has contributed in their incredible stock performance. Investors are bullish, people looking into the company see positive metrics, moving higher, getting better. So all of this, of course, creates tons of optimism in the stock. Now, my fear is that if the next earnings report that's coming out disappoints in some way, maybe they have bigger losses than expected, maybe they announce something that investors are not too happy about, maybe there's delays in something, any of that could result in a pretty drastic, sharp sell-off in Nio stocks. You have to be prepared for that, position yourself accordingly. Anything can happen, but when stocks move up this fast, this irrationally, it means that they're pricing in a ton of optimism, and anything bad can set that down quite significantly, like we've seen in plenty of other high growth stocks before. So either way, guys, be safe out there. Remember, Nio is still speculative today, so I wouldn't put my life savings into it. You can do whatever you want, not financial advice, but I wouldn't play with more than a couple percent of my portfolio in this company. Either way, let me know in the comment section down below. What's your outlook on Nio? Are you bullish, bearish? Love to hear your thoughts, comment section down below, guys. But either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.